Hi, and welcome to a talk about bankruptcy. Everybody hopes they never have to go bankrupt, but sometimes some people do. And it's not the same as it used to be when you go bankrupt. Today, it's kind of like a rite of passage, and you might even find that employers find you more desirable than someone who's never been bankrupt. And the most successful people have been bankrupt at least once. So the old shame is gone. A few people still have that old hangover belief, but not that much. And in some ways, it's a rite of passage. Now, let's see, what do we do to avoid bankruptcy? Because you don't have to go bankrupt to be successful. You don't have to go bankrupt to be rich and famous. It certainly slows you down on one hand, but the recovery is usually really fast. Anyone who is successful once will be successful again. There's a specific act, it's a federal act governing bankruptcy. So in other words, it's a Canadian law, but each province has its own provincial rules that surround it. And what that basically means is that you'll be allowed different possessions to keep or not keep and different dollar thresholds. So I'll cover that. So it's really a good idea to have a good accountant and to be on top of your finances. And when you see trouble is coming down the road, have a plan on how you're going to change things. And if it's business, it's not going right, don't keep hoping. Just be practical and look at what can be done and be prepared to cut your losses, know where you stand at all times. Today in Canada, a lot of people are going bankrupt because of tax debts. And when it comes to Canada Revenue Agency and tax debt, it's not a kinder, gentler Canada. It's a mean, nasty, and I'll even use the word vindictive, force that conducts financial terrorism. Let me describe what I mean when I say financial terrorism. Financial is to do with assets and liabilities. Terror is extreme fear. So when CRA comes calling and threatens somebody's home, their bank accounts, putting food on the table, that strikes terror in their hearts. Knowing that their bank account can be seized and the money that they needed to buy groceries for their children taken, and they're penniless in the stroke of a pen by Canada Revenue Agency. When they come after you and send their economic hitmen, their financial assassins, you fight desperately to get out of it, and if you've got good help and resources behind you, you might get out. But if you can't get out of it, bankruptcy is the answer. And quite often, CRA would just rather see you go bankrupt because they close the file and get what money they can, and they move on. And that's the pressure from within Canada Revenue Agency today. Close files, collect money. That's the deal. So what's involved with going bankrupt? Well, trustees are there, and if you look in the yellow pages, if you look on the internet, it's one of the biggest areas of business, people promoting business. There's so much competition between trustees for insolvent people's business that the cost of acquiring a client is very high. So that tells you something. You don't have all these trustees, which you have to be a chartered accountant, by the way, to be a trustee, as far as I know. And there wouldn't be that many of them if there wasn't a lot of bankruptcies. But they're at an all-time high now. And understand how it works with the trustee. The trustee's duty of care is to the Crown. They're automatically an investigator. And their second duty of care is to the creditors. And there's, of course, a duty of care and interest in themselves, and down the line somewhere you sit. So when you go to see a trustee, you're going unrepresented, your hat in hand and hoping for the best. And trustees are like any other business in Canada. There's good ones, and there's ones that are not so good. And when you're down and out and desperate and the wolf is at your door, you may not be thinking clearly. And so what we've started doing is helping clients with that and representing them, getting all the information together, and being the interface with the trustee. There are good trustees, and we deal with some of them. So what that's going to mean is we'll sit down with you and we'll go through a list of your assets, your liabilities, and we'll tell you what you're allowed to keep and what you're not. For instance, in Canada, Ontario, Canada, you are able to keep a car worth up to $5,600. If it's worth a little more than that, you have to pay the trustee the difference and you can keep the car. If the car is leased, then the lease company will most likely let you keep your car even though you're bankrupt. If it's financed and it's not worth how much you owe, you have a decision: turn the car back or ask the finance company or the bank to let you keep the car and you'll keep making the payments. In most cases, they'd rather get the payments. What you might ask yourself is, if the car is not worth what I owe, why don't I just go and get a car that's worth less, that's up to $5,600, and not have a problem, get rid of the debt? Quite often you can keep your house. Depends on the equity. Each spouse under family law has 50% of the equity. So if your half the equity is small, the trustee most likely is not going to want to see the house liquidated. The mortgage company would rather get their mortgage payments, and you're going to keep it. So you may keep your house, you may keep your car, and in Ontario you'll keep $11,000 worth of personal assets. And you are allowed to keep the tools of the trade. That's the small tools that you work with. You keep your personal, in the 11,000, there's your personal furnishings and things like that in your home. Now, there's always the question of, should I just do a consumer proposal or should I go bankrupt? Well, it depends on the circumstances. In general, you're better to try a consumer proposal. If the creditors refuse it, it's automatic bankruptcy. But you look better if you've tried to make a proposal to pay off your debts. Canada Revenue Agency is going to be your most difficult challenge because they want to close files and collect money. So they're going to want their money sooner, and they are less flexible. So the advantage of the consumer proposal is that you can propose to pay some or all of your debts, but you get up to 5 years to pay it off, where CRA is saying we want it in 6 months and maybe a year. So the trustee trumps the creditors, and if the trustee says that something's worth something, that's what it's worth. They make things happen. CRA has the enormous power of saying, no, we won't accept the proposal, you're into bankruptcy, and that's it. Now, when you look at your position, bankruptcy or credit proposal, a debt proposal has to provide more money to the creditors than if you went bankrupt. If they're not going to get more money than bankruptcy, then they're just going to say, go bankrupt, liquidate the assets, we'll get our money, and close the file. CRA has a special department that dealing with trustees. It's quite different than the assassins that go out to collect money on people who are not yet bankrupt, and from experience, they just assume you went bankrupt when you owe money. We've got a few collections officers in Canada that are registering complaints with the minister. Their behavior is despicable. They don't follow the public servant's code of conduct. They harass, they intimidate. It's just completely awful. Marriages are just falling by the wayside under that kind of pressure, so it's not particularly nice. And if anybody is going to be forcing you into bankruptcy, it will be your government, Canada Revenue Agency, collections officer, who thinks that you're a bad person and you should have just paid your tax. And they'll say things like, we're going to put you out of business. I don't know how they get the right to do that, and I don't think they have the right. I know it's not in their training manual that says, here's the measurement of how do you determine should a business be put out of business. And that should not be their job. They're not business consultants. They're not trained to evaluate businesses. They're just trained how to collect money. So it's quite an offensive stage. With the bankruptcy, you're allowed a certain amount of money. Let's just take it like as a person with a child and a wife may be allowed a couple $1,000s income a month. Anything over that's called a surplus. The surplus is split 50-50 between yourself and the trustee. And the money is calculated based on after-tax dollars. So money coming in minus income tax, minus your personal deduction, the rest is split 50-50. No surplus, and you get out of jail, so to speak, figuratively speaking, in 9 months. You have to apply for your discharge at 7 months, so that you get out in 9. Otherwise, you're going to be going in for the long haul of about 22 months. And in 22 months, you will get your discharge. Depending on circumstances, you may have to be in front of a judge who will decide whether you're going to be discharged from all your debts or whether you're going to have to still keep part of your debts if some of them should survive bankruptcy. In most cases, unless you have been a very nasty, naughty, devious person, you get out of this with no debts owing. And bankruptcy is made to give you a fresh start. And I would say that if you're looking at going bankrupt and considering it, and you're not dealing with us, I recommend going to 2 trustees. And don't sign up for either of them until you've had a chance to think about it and evaluate. And pick the one that you like the best and that you feel the most comfortable with. In general, I think most people like to do a good job. Some people sort of forget certain aspects of things they should be looking at, and they start thinking about how much money can we make. So it's like anything else. Be careful, be warned, but don't avoid bankruptcy and prolong it if that's the inevitable. Dale Carnegie said, cooperate with the inevitable, and then reduce the odds of it happening. Now, if it's going to happen, sooner is better than later, because financial problems and being terrorized shortens your health and harms your relationships. If it's inevitable, pull the plug, be done with it, you don't talk to the creditors, it's over, you get a fresh start, and that's what it's all about. Thank you.